How's it going, everybody? Hello, hello. Good morning, good afternoon, good night, depending where you are in the world. Welcome to a capital hungry London trading session market analysis stream. Could I get an audio and visual check in the Zoom chat, as well as from the YouTube audience, from the YouTube hyenas? All good, all good. Okay. So welcome to the stream. It's currently 2:15 a.m. Eastern, 15 minutes into German market open pre-London hours, with London open in 45 minutes. We're just going to go through some of the nitty-gritty stuff first, talking about the capital hungry resources, stream rules, and then obviously going through our systematic approach of understanding the fundamentals that are impacting the market timing itself with the new monthly candles setting up for the six-month cycle change into June, the economic events we have overnight, our mental reminders, and then obviously going through our analysis and everything else, okay? Okay, so for everybody just on the YouTube chat who is new, please take a second to read the YouTube description as well as the stream reminders. This is not direct financial advice, but feel free to ask questions about technicals, fundamentals, and overall financial markets. Do not ask for direct signals. Any questions about the Capital Hungry private service, go to capitalhungry.com or message me on Telegram. All of your Capital Hungry free resources are listed in the description on the YouTube layout, on this little stream reminder itself that just popped up for you guys, that little animation for the YouTube audience. And as well, I'm going to show you guys those links right now too, okay? Remember that all of these streams are always recorded, whether we win, lose, have ranging markets, have some crazy impulsive moves, news. We're all here experiencing it together. It's always saved and recorded. So for anybody who comes into the stream later and is asking about analysis on a certain pair, just tell them to rewind the stream, because we probably already discussed it as we do our analysis ahead of time here, right? So the Capital Hungry YouTube channel itself, tons and tons of free resources, webinars on fundamental, technical, and trading psychology concepts. Sorry, I was just checking out these headlines. UK's FCA says extended date allows crypto asset firms to continue their business without the FCA assessment being undertaken. So a lot of regulations are coming to the crypto market. Sorry for going off track here. A lot of regulations are going on heavily in the crypto market. If you guys haven't noticed, if you guys have been following along my tweets and everything else, right? But yeah, anyways, so the YouTube channel, the Capital Hungry News Twitter, and the Capital Hungry Telegram analysis channel. Okay? No, nobody threatened Daniel Savage. I was just baiting him, and he fell for all the bait. That was what you should watch that. You should watch that shit. Someone said, "Hey, breakdown, stop promoting." All right, bro. We're gonna kick this guy out of the stream. You can go watch something else. Go watch somebody else's London stream, cause you're in my domain here. You know what I mean? You don't give me instructions. You're just here watching in your Fruit of Looms. Remember who you guys are watching. Because remember, as manual traders, a lot of hyenas come into play who are used to following social media, signal chats, and they think everything is just doing analysis or taking trades. You know what I mean? They forget that we are manual retail traders with emotions and other psychological impacting factors that impact our decision-making process and can potentially fuck up our trading. So we have a set of rules and guidelines as we go through this webinar. Spamming in the chat like a retard, GJ, gold. It's not gonna get you anything in life. It's just gonna make you look like a retard. Anything, let's have a simple rule. All right? Anything you guys are about to type in the YouTube chat, first say it out loud to yourself at your desk. Like, are you really gonna yell gold 5 times to somebody? Probably not, right? You know what I mean? So let's just be a little bit smarter here. Everybody's fully grown adults. Before you type a YouTube comment, spamming away, going on your keyboard or your phone, just first say it out loud to yourself first. Be like, would I say this to somebody in person? If not, don't send it. If you would, then send it. But anyways, okay, let's get down to business here, everybody. Remember, we are manual traders. We have emotions. We have psychological factors that impact our trading. Some people are addicted to drugs or alcohol. Someone might be going through a divorce. Someone might have had somebody pass away in their life. Someone might have just failed some exams. Whatever it is, all of these different psychological impacting factors will have a major effect on your decision-making process. So, as manual retail traders, we have to remain as emotionally neutral as possible and keep ourselves logical and level-headed. Right? Clear your brain when you come into these streams. Reset. All the signal chats, all the social media shit, all the dopamine on social media, clear it out of your brain. Reset when you come into the stream. Cool, cool? Everybody good with the mental reminders? Let's go over some recent fundamental points. Now, there has been some historical repetition where we saw a heavy slowdown in volatility and volumes during the May period. This is due to a historical 6-month market cycle change. And if you guys Google search it yourself, it's an old Wall Street saying called sell in May, go away. It doesn't mean to short something or to start selling your investment or assets. It just means that a lot of investors are usually on the sidelines waiting for the summer months, and this historical repetition has been relevant through decades now, right? You guys can go check that out yourself. So if you guys notice, technically we had a lot more ranging on our currency pairs the last couple of weeks of May, and it was a lot slower. People were complaining about the volatility. Now we're past that phase, and obviously we're coming into the new month of June. We have to be cautious about the price points we are sitting at as we're starting a new month, because on our risk currency against safe haven pairs, we're either sitting at previous highs or new highs printed by buyers. For example, on GJ, GBPUSD, Euro USD, even gold here, where we're trading gold against the US dollar. And obviously the US dollar has been more bearish. Gold has been continuously printing highs by buyers and only having pullback phases. But as we're having a new monthly candle come into play, there is the potential for deeper pullbacks on the majority of the currency pairs or stuff like US 30 or precious metals like gold we trade. Okay, so we have to keep that in mind, and we're going to understand that when we go to our higher time frame analysis as well and start to zoom in the time frames. Also, keep in mind that economic PMI data across various countries, especially from Eurozone in the US, has been showing significant rebound, almost going ahead of pre-pandemic levels. For those of you who don't know, the PMI figures, the Purchasing Managers Index, is an index or grade of economic data across different sectors, whether it be industrial, market PMI, service sector PMI, whatever it is. Economists and central banks have always used that data to analyze the economic recovery, strength, or weakness of a country's various industries, right? So when we're seeing that PMI data is showing significant rebound from various countries, it's showing that market optimism is still very strong. And as you guys know, if you guys follow along the Capital Hungry News Twitter, or if you guys follow along any of the news headlines I forward, we haven't had any fear, uncertainty, or doubt confirms within the market to shift investor behavior or overall sentiment. You get what I'm saying? So overall, for example, when we're looking at our safe haven currencies like the US dollar is sitting at historical lows. And as the new monthly period is starting, we could have a potential deeper bounce, an aggressive bounce from these lows as just for the month of June to have that potential pullback play, then continue back down deeper. But overall, our safe haven currencies like the US dollar, the Japanese yen, US dollar obviously being the world's reserve business currency as well, have been fundamentally bearish due to that market optimism and support from the central banks, right? And then when you have a fear or greed indicator such as the volatility index, which is just really the inverse information from the stock market index S&P 500 from the US. Anytime there's massive amounts of short selling data within the S&P 500 or buyers taking profit and a flood of short sells, this shows that there's market fear increasing, because fundamentally and historically stocks only go up. Besides having crisis corrections, you know what I mean? Besides having the historical corrections that are caused by a crisis in the change in economic cycle, stocks have only fundamentally gone up. So whenever there's massive short selling on the stock market, the volatility index goes up. So whenever the stock market is aggressively pushing down, the volatility index goes up, which shows market fear. You can see the biggest spike on the volatility index when we zoom out here was from March 2020. The same time the stock market crashed to 18K for US 30 example, and started to flood and started to go back up to its previous highs and new record highs due to that central bank support and market optimism that came from economies opening back up, economic data rebounding, vaccinations and vaccines being distributed around the world. The same time you had that crash on the stock market, volatility index spiked up to record highs. But it's pretty much been the inverse of the stock market, showing you a lot more overall market optimism. This is the dollar index chart, sorry, but same shit here. One sec. Here. Okay, man, what the hell? Oh, it's on the left side here, sorry. So you can see the volatility index did the same thing. It had that initial fear spike, March 2020, when the pandemic fear first hit, and then ever since then, it's only been bearish, showing overall market optimism. US dollar, same thing. Japanese yen, same thing. And then when you look at your global stock markets across various regions, you can see overall bullish. Buyers just continuously printing new highs, only having consolidation phases and pullback phases, and then continuations right back up to new highs printed, all-time highs being continuously printed due to the flood of support from the central banks, the optimism regarding the vaccinations and opening of economies, etc., etc. The markets are ignoring any minor negative news. Any minor negative news you see really just causes pullbacks. It doesn't break the overall market optimism, because let's think about this from a trading psychology perspective, all right? If you have this market crash, remember, for the 1%, for institutions, for big corporations, for billionaires, crisis is opportunity, right? Historically, through every single economic cycle, whether it's from a financial crash, a pandemic, a war, whatever conflict it may be, any type of crisis that may heavily impact the masses always brings opportunity to those who have the resources to take advantage of it. So when you have this precision crash caused by the pandemic, remember, at 18K, it's not like the stock market fully crashed, because that would never happen. The central bank would never allow that. When the stock market precisely dropped to 18K, a short circuit breaker was hit on the market, where literally the central bank stops any more short selling of stocks or any more selling of stocks. They have the power to do that, right? They call it a circuit breaker gets triggered. Do you understand what I'm saying? Then the same time the market crashed, what the central bank does, the Federal Reserve, to help the economy rebound, is they've already cut interest rates. That's one thing to promote economic activity. The second thing they do is heavily start printing US dollars or increasing the US dollar supply in the markets. All those US dollars go into the government, US government through government bond purchases, into the US stock market through stock market ETF purchases, and into the hands of the US citizens through the financial stimulus we saw. So if you were any whales who got in from these lows, running with the central banks, riding in all of these waves, why would you want this to stop? What reason is there to stop? What fundamental reason is there that would cause a sell-off on the stock market now, after we already had the crisis take place and the opportunity taken advantage of by the 1% in whales? Why? What would be the... There's no reason. If you were in buys here since March, consistently scaling in buys, why would you want this to stop? Why would anybody involved in this greed train want this to stop? There has to be a fundamental catalyst that would cause another correction, and really the next correction I see, if there is that fundamental catalyst, is really just going to go retest previous highs and have about a 5,000 point drop. I think that's going to come from when the Federal Reserve increases interest rates, because what you have to understand is, as the Federal Reserve increased the supply of US dollars in the market and use that to flood the US economy and stock market, the byproduct of this was the US dollar itself got heavily devalued. So you have an oversupply of the dollar, and a decreased demand, the value of the dollar drops, meaning the purchasing power of the dollar drops. Now, a quick economics lesson here. For all the people who got financial stimulus checks, they don't even realize by the time they got the checks and the value of their dollar now, their purchasing power of the dollar and money they got went down. But on the flip side, due to the oversupply of the dollar and increased printing of the dollar, inflation and the cost of goods went up. So the purchasing for the middle class who's getting the money in the stimulus, who's still working or getting any type of financial support or still getting checks, due to the actions of the central bank, their payment, no matter what job they're working in the US, the purchasing power of their dollar heavily decreased. You went from 100.86 down to 89, we're roughly sitting at, over that yearly period. That's the cause and effect. That's the byproduct of it, is inflation increases. Okay? So there's a double whammy in the next few months, and even within the next year, that's going to heavily fuck up US citizens in the middle class, which is just always happens whenever there's a crisis. The pandemic, in my opinion, from the economic side, was a warm-up. As soon as, if the US dollar value doesn't get picked up from these lows, which would only come from the Federal Reserve stopping the financial stimulus, stopping increasing the supply of the US dollar, and increasing interest rates, that's the only reason the dollar is really going to pick up value from its lows and pick up demand and start to have an upside recovery move. Right? If that doesn't happen, and the US dollar continues to drop, the stock market continues to go up, well, inflation is going to increase. The cost of goods for the regular consumer is going to go up 50% or even double, which we're already seeing happening to a lot of commodities. If you guys haven't noticed, on the economic side of the world with supply chains, stuff like lumber, copper, coal, other commodities, basic commodities in mass sale are going through the roof in value due to inflation. That goes first. Then the regular cost of goods for day-to-day citizens, like their milk, eggs, food, gas, that comes after. Right? So you have this double whammy where the people are going to have an increase in their cost of goods, but a decrease in the purchasing power of the dollar they're holding in their hand. This is how they get fucked. But this is how the central bank shovels their money back into them. You know what I mean? I didn't mean to ramble there and give that little history lesson or economic lesson, but anyways. So the US dollar, through that Federal Reserve printing to help support the economy, has been heavily bearish. And the US dollar is a safe haven currency because it's the world's reserve currency. You know what I mean? So it's been bearish. Markets have been optimistic. All that money from the central banks, from the corporations, from the one percenters is going into our risk currencies because it's not just the stock market. GBPJPY also just happened to drop to historical lows. This is Brexit crash, these lows. This is 2008 crash, these lows. Buy low, sell high. Heavy upside move, heavy upside move. Pandemic crash. The pandemic crash was this little blip. And it surgically precisely went to the same low demanded prices as the 2008 crash and as Brexit. Remember, this is GBPJPY. So you have 2008 financial crash impact, which heavily inflates the Japanese yen as a safe haven currency and weakens all risk currencies. You have a crash. This is the historical low created in price point around 119, 120. Heavy upside move from that buy low area, thousands of pips, right? For years, you just have straight gains. Then Brexit comes into play. They take profit, short it right back down to that exact same low price point. Years later, upside move, still a very solid 2 years worth of upside gains. Brexit tensions are still active for those years. This is the pandemic crash here, 2020. Just precisely went to those exact same low price points. Pandemic gets priced in, central banks start to provide that support, vaccines come out, 120 up to 150, 3,000. How many pips is that? You know what it means? $30 in a year. AUD JPY almost went exactly to the 2008 crash point. Same thing. It's almost surgical. This was 2008 financial crash. Sell high, cash out, drop, because you have a risk currency against a safe haven currency. Upside rally for years of those straight gains. Pandemic was just this, which happened to surgically bring us right down to those demanded price points. And then we've been bullish since. You know what I mean? So you can't fight the central banks, and you can't fight the whales in the market. You have to trade with them. You have to understand what's going on and work hand in hand with them, right? So that's why you can't say like, oh, GJ is too high, this is too low, whatever it may be. Markets are still overall optimistic. The only thing that's going to cause US dollar strength is if the central banks start to taper off stimulus support, or if they start to increase interest rates. But anyways. Okay. Economic events for tonight. 4:30 a.m. Eastern, we have the UK Composite PMI. Also the Services PMI. That's pretty much it for our data over UK and Euro session. Over New York, we have a lot more data regarding the US manufacturing PMI data, non-manufacturing PMI, and jobs figures as well with the ADP non-farm employment change, and then the initial jobless claims as well. Okay, let's start off here with some analysis now on gold. So we have to understand, it's a new month. Gold price action is obviously still very bullish, but for the new monthly candle, it's nothing wild to get more of an aggressive pullback, create that lower wick, and then potentially still continue bullish, right? What we're seeing now, gold also hitting 1897 key level. If it breaks below, we're going to sell below. But anyways, what we're seeing now is a consolidation zone being created at these intraday highs. We were still bullish as we had this breakout of corrective structure and bounce buys at around 1897 previous price sensitivity areas. Oh, the beeps are on? Shit, my bad. Which alert was that? Okay, we're good now. So originally, because we were still holding this bullish structure I'm going to show you guys, I was still in a bullish bias looking for buys at a retest of 1902 on the new daily candle. Okay? Because what you can see happened was we had highs printed, a pullback corrective phase, and then this upside move to take advantage of. So what I was looking for the new daily candle was to get a pullback to retest 1902, 1900, and then continue back up to revisit these highs. But what we're noticing is for the start of the new month, the US dollar is picking up some more short-term strength and potentially going to break back above these intraday highs as well at 90.15. So there's a lot higher potential for gold to give us a deeper pullback for the new month if we stay below our 1897 key level here. You know what I mean? So what I'm basically trying to describe here is gold is still very bullish on the higher time frames. But as we had these new highs printed by buyers and we're having a higher time frame order block created, for example, like in these situations or in these situations, you can see something similar to like here. Once we break below the order block, we could get a deeper pullback before we continue up. So as it's still early in the new month of June, if we break below these candle body lows and remain below there, there's higher potential if we also have US dollar strength to get a deeper monthly lower wick down to the 1870s, then continue back bullish. Does that make sense to everybody so far? That's why I sent an analysis ahead of time to our private chat where we were still in a buyer's bias, but when I saw the price action at the 1902 alert get triggered, it was way too bearish and the US dollar was picking up strength. So you can see from these highs printed, the bullish price action was getting weaker and weaker, and now we're getting more aggressive bearish candles, fully correcting this upside move. But we're just back to the downside of the order block lows. So the same time you can see that gold is in this consolidation zone or order block at new highs printed, failing to break these lows so far, you have to also look at the situation of what the dollar is in standalone. Right? The dollar standalone dollar index is also in a consolidation at new lows printed for the new month. So what I'm going by as a correlation factor and technically and fundamentally with the market timing is if the dollar breaks above 90.15 and continues to the upside overnight or through New York, then we're going to see that upside move on the dollar, and on the flip side see a deeper pullback that we're going to take advantage of on gold to retest that higher time frame bullish structure. Does that make sense to everybody? So when you mark out this higher time frame consolidation zone, if you get breaks below these low areas here, as well as the dollar index breaks above that range we're talking about, then we're going to take advantage of this deeper corrective sell play on gold as a similar pullback stage you've seen here, or pullbacks like here, deeper pullback stage here. And then potential high risk, high reward buys if we do come down to 1860s and don't break lower. Because remember, on the higher time frames, we're still bullish. The market just moves in waves. You have its cycles. You have buyers print highs, pullback phases, continuations to the upside, buyers print highs, consolidation phases, continuations to the upside. What the stage we're in is a high printed and a consolidation phase. We have not had a break above the previous highs to take advantage of this. But if we break below the lows of the consolidation, we know we'll get a deeper pullback we can take advantage of, which is this. So the key confirms I'm looking for in this situation for us to capitalize on some sells here is pretty much if we can remain below 1897 but safer 1890. Because you can see on the intraday time frames, when I just clean all this stuff up as we were watching lower time frame structure, we're just in this consolidation zone. So what my confirms are going to be for safe sells is safest sells breaks below 1890, these candle body lows. At the same time, you're getting those breaks on gold below 1890. You want to see upside on the US dollar standalone on your dollar index above 90.15. Okay? I'm only looking for gold buys within the range. If we have a rejection on the dollar and we continue back down bearish, and if gold comes back above 1902, because when we come to the lower time frame here, you're going to see some very strong bearish lower time frame structure that's being created here. So on the lower time frame, you can see we just had this impulsive move. Even if we get a bit of a cat bounce or a consolidation and come to 1899, we can still continue right back down with sells below 1897. We would need to break out of this corrective structure and come above 1902 to take safer buys again on gold as we're in that consolidation zone. Okay? So we're only taking buys with this chain of events on gold. Or obviously if we dip to a lower side, higher time frame key level and support, but this is what we would need for buys. Breaking out of the structure, impulsive entry trades, retest trades, failing to break the lows. Otherwise, as London session opens up in 13 more minutes, if we get a pullback and retest structure, high risk sells if on the 1 minute we don't break above there and dollar still bullish. Safer sells if we reject there and break and retest below 1897. Those are the potential scalp trades I'm looking to take advantage of, as long as we're watching the dollar index movement hand in hand as well. Makes sense for everybody on gold analysis? If anybody has big balls and at London Open we don't break these lows and come back above 1897, you can take that 30 pip scalp to 1900s at least. But that's a big balls buy trade if you get that chain of events. No, because I'm doing the stream and got so much shit going on, I'm not trading tonight. Still early in the month as well, and you guys can see the trades I took in the Telegram analysis channel after my flex videos and shit. You know what I mean? Different gold trades and from last week as well. Okay, GJ. Let's go towards GJ analysis now, shall we, everybody? Remember, it's the start of a new month, so if we do get a deeper pullback, it's not, don't expect against it. But you can see when I show you this monthly candle, very strong bullish price action, right? Very strong bullish structure. That historical repetition I'm showing you guys of the bounce we have at these lows after every crisis. And when we're looking at the historical repetition of that upside after 2008, we're pretty much sitting here, where there's still a lot of room for us to go to the upside. It's almost identical. Same fundamental repetition as well. Okay? And when you come to the hourly time frame, that pullback we had for the new monthly candle it went to retest previous highs. So when you look at GJ, same thing, right? With that market optimism, with we're trading a risk currency against a safe haven pair, the Japanese yen has been relatively bearish for that entire year period, as markets have been optimistic with that support from central banks, vaccine headlines, and everything else we discussed, right? Also on GBP side, you had that economic recovery in data and Brexit optimism. So you've only had upside moves, pullbacks, and continuations up, upside moves, consolidation zones, and continuations to the upside, right? Before the month of May ended, we printed new highs by buyers and had a very strong bullish engulfing monthly candle close. You can see this price level was previous highs. The pullback stage we had here to correct some of that upside move and for the new month went to revisit those previous highs. What I'm essentially looking for, as long as Japanese yen stays bearish and markets are optimistic, is starting to revisit the 156 level now. Makes sense so far? Especially when you come look at here. So these were the highs printed. A lot of retail traders get trapped and they think it's a resistance, GJ's too high, and they start selling, but it's just a consolidation zone, order flow generation. You have an impulsive move, new highs printed, almost 150 pips above the previous highs at 156, right? This pullback was literally to previous highs as the demanded price point, and we're having a pretty aggressive bounce up so far. Now, when we're looking at the price action on the intraday time frames, it's not the cleanest in terms of buyer's momentum yet, but we are still slowly chugging away and respecting 155.200 as a support level, right? So this was the retest of previous highs, impulsive move, corrective pullback phase, now slowly making our way to retest these previous highs. What I'm looking for, as GJ is now in an intraday range between our 0.200 PPL and 0.500, is with London volume, either safe buys above 155.5, looking to target 0.800 and 156. Or if we get a pullback down to these previous lows to create a potential double bottom here in this area, I'd be looking for buys at 155. I've never been in a sell bias. You guys have seen me in for like a year, not being a sell bias on GJ. Only call buys, only patiently wait for the buys, only walk through buys. It's rinse and repeat. You know what I mean? I'd only be looking for corrective GJ sells if we broke below 154.800, because then we're coming back below previous highs, and it shows me a deeper pullback we're going to get for the new monthly candle, as we're still early into June. Otherwise, if we break above 155.5, we're going to start looking at price action for buys above there and looking to scale up. Even if we get a pullback overnight to 155, I'd still be looking for buys in that area. On the lower time frame, the price action has been getting very messy into the early month here. It's not really clean price action. We're just having this sort of resistance, liquidity zone being created. But if we can break above these rejection points with the active price action, which is also our 0.500 PPL, shows a lot more buyer's momentum for us to take that 30 pip range to the upside. I'm pretty sure, in my opinion, the UK PMI data at 430 should be solid as well. So that could be one of the catalysts and factors for us to break to the upside. But I'm not really looking to sell GJ at all, unless we get those confirms I'm telling you guys on the intraday time frames. GU, same idea. See how we have a risk currency against a safe haven pair, British pound against the US dollar, which we know why the US dollar has been bearish. One, it's a safe haven currency and the world's reserve currency, so its demand dropped as all the money was going into the stock markets and buying the dips on our risk currencies against those pairs, against those safe haven currencies. Two, because of that increased inflation and increased money supply by the Federal Reserve. And then obviously because of that, it's very, very similar structure to GJ, where you only have upside plays, pullbacks, and continuations up, upside plays, consolidations, and continuations up. This was the last previous highs printed by buyers before the month of March started, where we had this deeper corrective pullback phase to revisit this previous high price sensitivity area, and then we had this continued upside move to revisit these highs. If anybody followed the GBP USD higher time frame analysis here, or the Euro USD higher time frame analysis a month ago, you would have literally got 400 pips. Just taking one swing position and holding it based on that concept there. You know what I mean? So if you guys want to, obviously the move is done now, but if you guys want to see that I'm not talking shit, the moves were called ahead of time a month ago in these breakdowns. It's like a full top-down analysis for GU and Euro USD. So it's not just the live streams, it's not just the rants, it's not just the market updates or the scalping. We do higher time frame swing trade ideas, intraday trade ideas, everything. But anyways, what I want to discuss now is, as we are starting the new month of June, where we are creating a consolidation zone at these previous highs. So the same time the US dollar, right? The same time the US dollar is sitting at previous lows and creating a consolidation zone at previous lows, GU is the inverse because it's GBP against the US dollar. It's sitting at previous highs and in a consolidation zone as well. Okay? The only way I'm taking corrective sells on GU for a potential pullback on the higher time frames here is if we break below 1.41. And I'm taking the sells down to 1.40. Otherwise, I really don't want to touch GU in this higher time frame consolidation as we're sitting at previous highs. I would rather confirm that US dollar strength, break below 1.41, then take those counter trend trade sells down to 1.40, 1.395, and then look for better risk versus reward buys here as after the new monthly candle makes its lower wick, as long as we don't have any fundamental fear, uncertainty, or doubt. Or the next set of safer buys is above 1.42 area. This range is pretty disgusting. I guess you can ping pong trade this range, but you have to understand, as manual traders, it can be very stressful when you're trading consolidation zones and ranges like that, and it can really wear down, I guess, your energy. How can I describe this? It could really ruin your higher time frame bias and what you have pre-planned, because you're stuck in these consolidation zones and you're potentially scalping it up and down, and it almost leads you to overtrade and over leverage. What I'm trying to say is, there's so many retail traders who don't have the understanding to be patient in the markets and play with the overall trend, and understand sometimes to stay out of consolidation phases or pullback phases and just wait for the breakouts and the impulsive moves or the pullback plays to happen and take advantage of those plays instead. Right? Instead, they'll be fighting the market during a pullback. They'll be fighting the market during a ranging or consolidation period. They'll burn through all their capital then. Then the move will take place and it feels like, oh, fuck, I missed the move. How many retail traders do you guys see? 90% of them go, fuck, man, I missed the move. Shit, man, I missed the move. They don't miss the move. They just don't have any capital left in their account after the pullback took place or after the consolidation took place, and they already burned through all their shit, and then the move took place and they couldn't even take a trade on it. That's what happens. You know how I know that? Because we all been there. When we first start trading, I've been there, you've been there. You play these consolidation zone and ranging markets, you burn through all your capital and profit, you get angry and emotional yourself. The next day you have the breakout. It always happens that after you crash your account, the next day or the next session, you have a crazy impulsive move that everybody catches besides you. And then you go, fuck, man, the market's bullshit. It's manipulative. No. Remember this psychological trait that is very relevant within trading. And a lot of people seem to forget, because 99% of us come from 9 to 5 jobs, right? Our whole life, including me and everybody else in here, right? Unless you're some rich kid. In trading, you don't get paid for your time. You get paid for your knowledge, skill set, risk, and experience, and patience. You're getting paid for your skill set. It's like how an athlete gets paid for their performance, right? It's the same type of idea here. You're not getting paid for sitting 8 hours at the chart and then being like, fuck, man, how come I lost these trades? I was at the chart for 8 hours. This is bullshit. No. You can make more advice, you can make more profit and money patiently waiting for the clean trending markets or trading with the trend, waiting for the pullback phases to happen, waiting for the breakouts of the consolidation zones, than trying to scalp ranging markets every single day. That's why capital hungry private members, how many times have you guys seen me take days off trading even though I'm still giving analysis or calling out trades or still doing these types of streams and calling out trades? But I'm sitting out. You guys saw the trades I took maybe in the previous day, or you saw the money I made, right? Or you saw that I already traded my 3 days of the week, or it's not really clean conditions. So a lot of people have to understand that you don't get paid for your time here like it's some 9 to 5 job. You're getting paid for your knowledge, your skill set. You know what I mean? For anybody who doesn't understand that, make sure to go watch this False Expectations for Retail Traders and the Growth and Feelings webinar. All right. So let's see how this hourly candle closes. GJ is just in a messy range right now, but we're going to wait for those trade ideas. Gold just bouncing off 1895. It looks like it's going to give us our pullback to retest structure at London Open. If we get that pullback, we'll watch it accordingly. As long as dollar still holding its bulls, we'll watch the dollar on the 30-minute time frame. So if dollar does a quick pullback, continues back up bullish through London, and gold does that pullback to retest that bearish structure, high risk sells, and then below 1897 sells. GJ, okay. GU, we're not going to touch. GU, somebody tell me if GU breaks below 4100, then we'll FMG sells. Not actually, but just somebody tell me if we come below 4.1 on GU or if we come above 4.2. Otherwise, this range is disgusting and it's sitting at previous highs as well. I just have to go to the washroom. London session just opened up actually. So let's just see how this sets up now. No rush. London session just opened up. We still closed above 1897, but I wouldn't feel safe taking buys unless we came above 1902 now and broke above that corrective bearish structure we identified in the lower time frame. Otherwise, if we get that pullback and then turn bearish below 1897, we're taking sells down to these lows and potentially deeper. Or even if we break below 1895 as well. GJ, let's see how the hourly candle. And then I'll give some Euro USD, USD CAD, and US 30 analysis when I come back. For anybody who wants to see gold or GJ analysis, just make sure you rewind this webinar. I'm just going to the washroom quickly, all right? John, I answered your question earlier in the webinar when I was talking about the sell in May, go away effect, which is... You can just rewatch this webinar. The alarm's not on still. Nah. Should be off. No, it's off, man. Shit. There's another one here. Where'd this come from? Where'd these ones come from? Why is there two? I put doubles here. Alright, we're good, we're good. Sorry about that. Stay awake, stay alert. Stay alert. It's late night, you know what I mean? Stay alert. Oh, Euro AUD, what the hell happened here? Alright, once I come back, we're gonna do some Euro USD and USD CAD analysis. Then we're gonna start breaking down price action on gold and GJ for potential scalp trades to take. And then I'll answer any questions, charts you guys want to send, anything else, you know? Alright, I'll be back in a minute here. Okay, what we got going on? So gold, rather looking for that deeper pullback, or if that was just the hourly wick and we come below 1895. What is this range if we come above 1897 to the pullback? Almost 30 to 40 pips. That'd be pretty favorable too. If we get some bullish engulfing candles above these candle body highs here, then there's higher potential we're gonna get that pullback to like 1890, 1900. Or I'm watching if we break below 1895 here. Everybody do me a favor, if you guys don't mind liking the stream and subscribing. You know what I mean? It helps with the YouTube algorithm. Turn on those post notifications, send it a like if you guys enjoy these streams and the information. Usually I do it twice a week, but I've been extremely busy, so I've still been trying to do it once a week at least. Dollar has not broken the bearish market structure until it breaks above these last lower high points around 90.200. Once it breaks above here, then you're going to have a more aggressive upside move on the dollar. But we have yet to have that yet. Right now, it's been sitting at those previous lows, creating a consolidation liquidity zone, bouncing up and down. It is looking potentially bullish overnight so far, but no break of that higher time frame structure yet. Just because it's breaking the trend line doesn't mean it's breaking the structure. You know what I mean? You have to look at those last price points of interest. GJ is just ranging for now. I'm just going to read some of these headlines quick just because I haven't got a chance to check them out yet. German economy minister says economy has put the worst of coronavirus pandemic behind it, so that's good, pretty optimistic. IMF sees Italy's 22 GDP at 4%, an increase. German economy minister says we can reach GDP growth of up to 4% this year. That's a very optimistic outlook. Hopefully this market optimism gives us more weakness on the Japanese yen and some bullish upside on our risk currency, so we can take those GJPYs above 0.500. China Commerce Ministry says China and the US will work together to solve some specific issues for producers and consumers in the next step. So again, some more optimism regarding trade wars and trade deals. But other than that, we might not see any movement on GBP until the UK economic data. Hey, I just joined. Is gold bullish or bearish? I told you guys. I'm good at predicting fundamentals, technicals, and people. You know what I mean? I told you, there's always these guys that come late as fuck. They come after London's open, after we did our analysis, after we marked out what we're looking for, and they just cut. I called it, yo. We should put bets on this stuff. We should have some side bets on this stuff. Gold is just ranging right now. I would like to see gold either do a pullback to 1899.5, 1900, or if we just consolidate and break below 1895 sells. The pullback buys are high risk, high reward buys, just because you're going against the current lower time frame structure and profit taking we're seeing at the highs printed. I'd only personally be taking safer buys above 1902 at this point, or if we got further rejections at these 1895 lows. And then so instead, because if the hourly candle comes down to 1895 again, then pops above 1897, then I'll take this buy range. But I need to have more sellers exhaustion and failure to break these lows then I'd come and let it flip back above the key level and take advantage of that 30-40 pip range. Otherwise, we have to understand the current lower time frame structure has been bearish. We have US dollar strength. So what we can see happen is just gold mess about and consolidate, then break below 1895 and dip lower. So I was primarily looking for this. Or that NFP. Do you guys think ADP is NFP? You guys are stupid? Oh. Do you guys think that private data on Wednesday, Friday? I'm just kidding around. No, NFP is just going to show continued job growth. All right. Let's keep an eye on GJ as it approaches 0.500. Yeah, no, I was just joking around with you, bro, because someone else said ADP, but that's like, you know what I mean? If you guys know what that is. How do you pass the time when you're waiting on a trade? First, you do analysis. Then you set your price points of interest that you want to execute on. Then you set your charts up so you can actively observe price action if you come to those price points of interest. Then you read a book. You do some push-ups. You set some alerts. You do a stream and talk to people on the internet like me. You read some news headlines. You keep yourself occupied so you don't exert all your mental energy mindlessly staring at the chart when it's not time to take your setup yet. Get what I'm saying? So just because I'm streaming and on your guys' screen you see my chart, don't think that I'm just like staring at the 1 minute chart like, you know what I mean? I'm not like a hyena like you guys. I'm not like eyes wide open, staring at the chart like, oh, fuck. Now they're, oh shit, what's going on? You know what I mean? We do our analysis ahead of time. We identify our price points of interest that we want to execute on, whether it's a buy or sell, and the reasoning why. And then we patiently wait for those entry points, whether it's setting alerts or just actively watching, you know? Yeah. Oh yeah, somebody said you guys can feel free to ask questions and send charts. Once you like the stream, you can do anything you want. No, I'm just kidding. You guys can send charts and ask questions whenever. But anyways, we went through gold analysis, we went through GJ analysis, we know what we're looking for. GU we're not touching in this disgusting higher time frame range. Let's take a look at Euro USD now in the higher time frames because it's the exact same thing. Okay, so Euro risk currency against the US dollar, safe haven currency. This was the pandemic crash you saw take place and happen here, where the US dollar for that short-term period spiked up in value until the Federal Reserve started to increase the US dollar supply, which decreased the value of the dollar. So as the dollar went bearish, we had this bullish market structure sense on Euro USD, right? Bro, relax, bro. This isn't a sports channel, man. Nobody's gonna join your sports telegram. You're fucking spamming in my chat. There's only like 100 people in this chat. It's a trading chat, and you're spamming some sports. Sportymon? The fuck is Sportymon Go? Fucking take it easy. Holy Charles. All right, so you can see that with Euro USD, as we've had weaker US dollar, stronger risk currencies from these historical lows, we've only had upside moves, pullbacks, and continuations up, upside moves, consolidation zones, and continuations up, right? So when we're looking here, you can identify those various phases here. Before the end of 2020 and the start of 2021, you had the yearly candle close here, and because it was a new yearly candle opening, we had this more aggressive pullback stage, which took us back to those previous sensitivity lows, and then we had this upside move to revisit these highs since, right? So obviously overall bullish market structure is intact. Intraday bullish market structure is intact as well. But you have to understand, like the US dollar and our other dollar pairs, Euro USD is in this higher time frame range at the start of the new month of June, sitting at these highs. If we break below 1.217 area here, and we have US dollar strength, then I'm looking for deeper corrective sells down to 1.21 flat. Okay? Other than that, you can see just for the end of May and the start of the month, it's been very, very messy overall. If the gold just ranging here on the key level, GJ just ranging as well. So Euro USD is in that range. We're either waiting for the breaks below 217 in those cells, or not touching it in this range. This was just some corrective structure I was watching, you know what I mean? So below 217 is the sell range I'm looking to take advantage of if we have US dollar strength. Because then we can anticipate buyers are taking profit from these highs, that US dollar is picking up strength from the lows. Then we break below 217. We take that range down to these previous lows, and then that monthly candle creates that deeper lower wick to start off the month. USD CAD, you can see that how to confirm our fundamental concepts is, what do we have with here on the US dollar against the Canadian dollar? We have our safe haven currency first, our risk currency following up after. And we know that the US dollar has been bearish, so this has very similar structure to the dollar index, where another positive confirm for bullish Canadian dollar is bullish crude oil. So same idea at new lows printed on the Canadian dollar, we're just consolidating as we close off the month of May, where May is already known to be a historically lower volatility, less volume filled month. And just to start off the month of June right now, we're just still setting up that monthly order flow in consolidation zones across most of our dollar pairs. All right, so we're more going to focus on potential scalp trades on gold and GJ, which has been giving cleaner movement. GU, we're going to patiently wait below 4.1. Euro USD, we're going to patiently wait below 217. UCAD, I'm only taking buys on UCAD above 208. And gold, we're patiently waiting how we react at 95 as a make or break area too. It's only 30 minutes into London session so far. Pretty slow night to start it, but we do have some UK economic data in an hour. I can't say everything. Like, I can't give full detailed analysis or do these streams every day. Someone's like, why don't you do these streams every day? Because I already run a paid service as well, like the Capital Hungry private chat. And we do like these trade idea webinars, different Zoom chats, whether it's at pre-New York or Asian market updates or London sessions, weekly flow. We do this stuff every single week, every single day in Capital Hungry. You know what I mean? So I still do these streams at least once or twice a week for the YouTube community. Why isn't the same happening with GBP AUD? What do you mean? Like the same what? The same as what? For GBP AUD? What are you expecting on what are you expecting on GBP AUD? Sorry, I don't understand your question. I don't trade USD JPY. I don't trade safe haven currencies against safe haven currencies because it can get very messy when you're primarily in these pandemic market conditions trading based on investor behavior and market sentiment. So when you're riding that market optimism, most of your safe haven currencies are bearish. So then you have to sort of play a tug of war of which individual country's economy is stronger, or investors, or what country do investors have more faith in, and that's very difficult to do. And it's not really the cleanest market structure either on those pairs. You know? Gold, nice little bullish candle here. It looks like we're gonna get that pullback we're talking about. All right, as markets are fairly slow right now, 30 minutes into London session, and we're waiting for those trade ideas. If you guys want to send some chart codes, okay, I see a lot of questions about where to learn fundamentals. What fundamental fucking books to read? Where can I start basic fundamentals? Where I would like to learn fundamentals as a complete beginner. I don't know. Listen, I think there's a difference, and you guys might get offended by this. There are people who do and execute, and there are people who sit and fucking watch. And I don't want to be rude, but anyone who asks the question about where to learn fundamentals, you're the type of person that sits and watches everybody else and just sits and watches your life go by. As sad as that sounds. You know what I mean? So I don't want to be rude in that sense, but do you guys think that when I started trading in 2017, that I just had all this information in my mind, or that I read one book, or that I watched one video, and then that was it? And then I can send you guys that same book to read, and then that's how it works? That's how simple it is? You know what I mean? Because that's not how it works in the world. Maybe in your maybe in your dreamland, but in the real world, that is not how it works. It's constant trial and error, application, learning what works, what doesn't work, what information is valid, what isn't valid, back testing this information. It's not like you can read a singular book, or it just doesn't work that way. And the crazy part to me is we live in a society where everybody has supercomputers at their fingertips, and they're so lost. You know what I mean? So you guys should feel a little bit ashamed. And you shouldn't feel that shame in a bad way that I'm making fun of you. You should feel that shame and don't you have more pride in yourself? Don't you have more ambition or belief in yourself? Are you really that down and out? You know? But it is what it is. Yeah, I'm only gonna look at other pairs if you guys send. I'm only going to look at other pairs if you guys send like chart codes, then I'll check out your analysis and what you guys see. Otherwise, it's hard for me when you guys are saying like, it's hard for me when you guys are saying just random stuff like look at this or look at that, because obviously I don't know what you're trying to say. So if you want to label out a chart, then I'll more than take the time to take a look at that, you know. This 30-minute candle on gold doesn't have an upper wick yet. If we get bullish closures above these candle body 1 minute highs here, it does look like we'll get that pullback phase and then continue down, or if we break below 1895. We're just patiently waiting, as it's just very slow price action and volatility so far. GJ trying to come to 0.500. GJ moving. GJ getting close to 155.5. Okay, but is it there yet? This is what I mean. Like, what do you fucking... Is it there? How many people have just spammed in the... We got Viggy in a fucking private chat. Shame on you, bro. You don't think I know when GJ's coming to 0.500? I'm the one running the fucking stream. What do you mean GJ trying to come to 0.500? You're pushing it there? You're underneath it, carrying it? Once it comes to 0.500, I'll flip over to the chart. I'll take a look at it. You know what I mean? Don't worry, guys. No, I'm not trying to add an alert. But yeah, don't worry. Because I don't want anybody getting caught in this. Once we clear above 0.500 and above that range, it's easy continued buys, right? CAD JPY is a great pair to trade. I don't trade it, but it's a great pair because of all the fundamental confluences you have with oil strength during CAD strength with optimistic markets, and it's a safe haven, and it's a risk currency against a safe haven pair, you know? CAD JPY. So this is just the 30-minute chart you got here. So I can't really see too much. But what I'm guessing is that CAD JPY is sitting at intraday highs or previous highs, and it's consolidating just like GJ or EJ or any of those other pairs, right? So let's take a look at that. Yeah, new highs printed is fucking exact same shit as GJ. So new highs printed, consolidation zone at these highs. You're just looking to play within this consolidation zone based on your analysis. It doesn't look like you're trying to do anything crazy higher time frame, right? So you're just looking at if we don't break these previous highs, we'll have a pullback. So I could agree with that. But when you're looking at the hourly time frame at these previous highs, it's looking pretty good so far. It would be nicer to get a break out of this bullish market structure, similar to what you had here. So once you clear below 91, I see that as safer confirms for deeper sells down. So I agree with what you're trying to do. You are counter trend trading, but the idea makes sense as it's early in the new month. We haven't broken these previous highs for the first time, for the second time. And also, if we get the confirms of breaking this bullish lower time frame structure, then we'll have some cleaner downside. All right. So that makes sense. I just wouldn't rush it here. I wouldn't take the sells here, and I'd wait for a cleaner break of the structure below 91. No, gold is not the same as UJ. Gold is not a currency pair. Gold is just a precious metal in itself. So gold has different fundamental impacting factors that has kept it overall bullish on the intraday time frames, which is an increase in inflation. If you were watching the start of the webinar, you would understand that I was talking about how the US dollar has been oversupplied how it's caused inflation and an increase in the cost of goods. So you have to understand that when inflation increases, this is an economic risk for investors. It's not a having hyperinflation or a massive uncontrolled increase in inflation is not a good thing. One of the ways investors hedge against increases in inflation is by pooling money into gold. So as inflation data has been coming out and we retested these higher time frame bullish market structure point and double bottomed at 1680, one of the main reasons we've been bullish is, one, we trade gold against the dollar, and the dollar by itself is bearish, and gold as a precious metal safe haven has been more bullish with the increases in inflation and investors hedging their risk with pooling into gold. All right. I sent a chart in the trade room. Somewhere here. The 1902 trade. Okay, so it looks like we're gonna watch gold's reactions here at 1895.5 lows. Let's see if we bounce or break below. If we fail to break these lows in this 30-minute candle and flip back above 1897, I'm gonna take corrective buy scalps from 1897 to roughly 1899.5. If we have a clean break and retest below 1895, then I'm taking that sell play down, as because obviously this was going to be a corrective play. I was going to look for sells up there anyways, but I'm watching the reactions here. So let's see how we react down there. No entries yet on anything. What's GJ sitting at? Did GJ go to 0.500 like you guys said? Oh no, it didn't. You guys fucking jinxed it. So GJ will watch when it comes to 0.500. Gold, we're gonna see how it reacts at these lows. Stop loss is based on market structure of where your trade would be invalid. So it's really situation dependent. Sure. Yeah, any chart codes, I'll check it out for you guys. So far, London session's pretty slow, you know what I mean? So who else is streaming tonight? Is Monty streaming? Should go raid him. See what I mean here? If this candle closes bullish above these candles with this rejection here again and no 30 top wick, we come above 1897 and then break above these candle body highs, we're gonna get that pullback to like 1900 area here and then watch price action accordingly. But that's why I don't want anybody to prematurely sell. Yeah, sorry, I'm going to check out your chart. That's called Epic Pen. That tool I use to draw on top of TradingView is like some software. It's free. It's called Epic Pen. All right, what do we got here? NZD USD is going to be very similar to Euro USD structure, where it's going to be consolidating most likely on the higher time frames, but you have to keep an eye out on the dollar. You're looking for some upside. You want to buy down here, or you want to buy over here? Which one is it? No, gold we're waiting below 95, or if we come back above 97. I'm just going to go to NZD USD quickly. So NZD USD, same pretty much setup as Euro USD. You had these highs printed, pullback stage, demand area. Didn't go to fully revisit these highs yet. I would be cautious looking for buys on NZD USD just because dollar has that short-term strength still. You know what I mean? So for me, NZD USD, especially as we're having this consolidation zone and multiple rejections at this price point, if you start to break below 7.2, you're going to get a deeper downside move to 7.15, potentially deeper for the new monthly candle. Don't forget that's a new monthly candle. Safer buys on NZD USD would be above 7,300, and then you still have a great target of previous highs, right? I personally trade gold, GJ, and Euro USD the most. I trade all these pairs. I do actively trade all these pairs though, but it depends what's showing the most high probability setup. This is why I told everybody don't rush on GJ because it's just ranging. Don't get your panties in a bunch, you know. We got some medium report PMI data here. Coming from France and then Germany after, and then Eurozone as well. These are more medium reports, but we'll still see if it brings more optimism. And then after, and then UK's is at 430 as well. Yeah, yeah, I'm still checking out the charts you guys are sending. Don't worry about that. Yeah, usually the US dollar has a lot more influence regardless of what pair it's in because it's the world's reserve currency. Okay, let's see if gold finally breaks these lows or not. What time is it right now? 3:46. We still have 14 minutes till the hourly candle closes. This 30-minute still doesn't have an upper wick, but it doesn't really need one if the bearish pressure is strong enough. But still no closes below yet, so let's see. It is a more aggressive bearish candle here though. Okay, there you go. but obviously we can't enter a sell on that candle. So I'm more looking for the retest, or what if we get the retest of these lows now. Hopefully it doesn't just stupidly melt. Yo, gold, man. We wanted to sell at a break of this low. We didn't get a chance with this impulsive entry here. I want to see how this closes too as well. Because that dollar strength is continuing as we expected, but I'm just looking for like a retest point here. We only have like 10 minutes until the new hourly candle. You caught the move with the sell stop. That's a good job by you. No, I don't use sell stops personally. I did not catch that. I thought we were gonna have like a nice bearish close, a retest. What's good now is we're going to get a potentially nice hourly candle close below the 1897 and 1895 zone. So if we get a nice hourly candle close, then we'll look for a retest on the 4 a.m. open candle. Because I personally didn't get a chance to enter that or catch that. It dropped pretty quick there, you know. But it did follow the analysis we called, just didn't give me an entry. Nah. I don't know how you guys caught that unless you used the sell stop. I personally didn't catch an entry there yet, so I guess I'm gonna be patient and wait for the new hourly candle now, and in like 9 more minutes here. Someone said account blown, big L's on gold. You took a buy. No, just the reason was because the reason why I wanted a break in retest confirm, and obviously we didn't anticipate this 50 pip drop in the 1 minute, was just because of the reactions we've had in this area before. So I just wanted to see cleaner price action for an entry, because we were either looking for this play or this play, right? But I didn't get any good entry confirms here, and then it just melted. But it looks like we're going to get the retest soon for the new hourly candle. GJ still ranging, GU's in the range. Euro USD, if it comes below 21700, we're gonna sell. Dollar's doing that bounce we expected, and like upside move we expected. We just didn't get good entry confirms on, like, gold followed our corrective sell analysis as we adapted to that. When we noticed the dollar strength and the break below 1902 and the bear structure forming, but we didn't get the manual entry where we wanted it, you know. So the analysis played out, but I didn't get an entry. This hourly candle's closing in another 5 minutes as well. I want to see how it closes, because imagine it closes back in the range. So you never know with gold. So I'm just keeping an eye on it and being patient, because I missed this sell. So I'm just gonna see what happens now with this hourly candle close in another 4 minutes. If gold ends up closing back in the range, that'd be we're gonna have to go back to the hourly time frame and see. That's gonna be a big difference. Yeah, I'll check out these charts you guys are sending as well. We're primarily focusing on taking any trades on gold or GJ tonight, as most other pairs are ranging. Gold analysis played out for the sells below 1895. We're either looking for these high risk buys up to the sells or the sells below 1895, but I didn't get a good entry, so I didn't get to take that because we were just playing this corrective lower time frame structure and that US dollar strength. Euro NZD chart is a 4-hour time frame, but I'm validating on the hour. Okay, so on the hourly you have a lot of rejections here, so it's a key price sensitivity area you got marked out, especially with these wick rejections here. The Euro data, as per the PMI figures, looking a lot better too. So if Euro picks up strength against the New Zealand dollar, which it does look like, as the German, France, and Euro PMI was all on forecast or potentially better, then it's a pretty nice buy to take back up to these highs as a target point as well. I like this bullish market structure that's developing too. You paste the sell stop there. Okay. That's smart to catch the impulsive play, because we had that nice break below 95 on the 1 minute time frame as well. Okay, so new hourly candles opening up. We're still closing above that support and range level, so I'm being cautious of how this hourly moves. If it makes a lower wick first, then continues up, but I'm gonna watch how we retest that order block low area for potential continued sell entries. Still very nice continued aggressive bearish price action, dropping down to these low points. Eurozone PMI was also good. Tonight's a pretty quiet London session. Besides this gold move, which I sadly missed because it was too fast for me to get an entry on, not much has gone down yet. GJ has been ranging, GBP USD ranging, Euro USD hasn't done much except for come to the lower side of the range. We got that dollar bounce we wanted, but it's just back up to those intraday order block highs as well. So nothing crazy yet. Yeah, sure, I'll check this out. I'm just gonna go fill up my water bottle after I check this chart. Oh, okay. So I like this. This is a 30-minute chart. I like the bullish structure you identified. I like the potential range you're trying to take advantage of. Also that you're breaking above these price sensitivity areas, and if you come above, even if you get a pullback to 8.3, you could get better risk versus reward buys here at 8.3 as long as you maintain this bullish market structure, and safer if you come above 8.4. That's a nice target as well. All right, I'll be back in a minute. I'm just gonna go fill up my water bottle, and then we'll see if we get that pullback to take advantage of on gold or not. This is that support level as well, 1890. So we're gonna see what sets up here. Okay. All right. Sorry, just to fill my water bottle. What's going on here? Yeah. So looking like a no trade night for me so far. We had our gold analysis for the sell ideas mapped out. If we were either going to get the pullback to 1900 or the break below 1895 as we adapted to that dollar strength, but This was too impulsive for me to enter, and I didn't have any sell stops or anything like that. So I'm patiently waiting if we get a retest or what sets up. GJ, we're going to keep an eye on it if it comes above 0.500 for any potential scalp trades and buys on that, as we are approaching that pretty close here. If we get any bullish breaks above 155.500, we're going to start looking at the price action there. And our other US dollar pairs, as it's very early into the month of June, are just technically ranging. So we haven't been touching those, understanding those recent macro fundamental points. And the economic events we got going on as well. Headlines have been pretty quiet. It's been pretty optimistic in my opinion, but nothing that's bringing crazy volatility. Economic data was fairly neutral as per the Eurozone figures. It was what was expected with more economic recovery, but it's still early into the month of June, so we're seeing more price setups and consolidations at previous high points or like on UCAD previous lows created. So it's all good, no rush. I have a little bit of FOMO because we planned out this sell, but we didn't get an entry, and it was such a fast, clean, quick, like 40 pips. But it is what it is, you know. That's the nature of the beast. Private chat, maybe with you guys. I'll come back to see what sets up for pre-New York. We'll do another Zoom session for New York for like an hour and a half because I fell asleep yesterday after our London session. I had an alarm set, but I slept past it. Because we have a bit more PMI data in 20 minutes from the UK side. Then Asian session closed, the new 4 hours closing in about 40 minutes. So I'm going to end this stream around then. And then obviously I might do a pre-New York session for our private chat around like 7 a.m. You know? GJ teasing around 0.500. I want to make sure we don't so I want to make sure we have a clean break above for an entry and we don't get any price action rejections like this or like this below it, right? Or like this. So let's look at GJ here where the momentum is looking a lot better now. If this candle closes as is, we might get a bit of a deeper pullback to these candle body highs here, but it's looking good. So this was a solid, that entry candle that we're saying looking good, but we're breaking above those 1 minute highs to the left, but we have to make sure the following candles don't engulf this push we just had. So we don't want any bearish engulfing candles that cancel out this push. You just want weaker bearish candles, more consecutive bullish candles as we push to the upside. If you get a bearish engulfing below 4.8 here, then trade manage and take that minor loss and get out of GJ. You know what I mean? So any bearish candles below that arrow, I would get out of GJ and take that maybe break even or 1 pip, 2 pip loss and wait for a better setup. But I pretty much want a stretch of price action like we had here to continue us back up above 0.500. And we have that UK data after as well. So I don't like how this candle closed weaker bullish body, but as long as we don't have any engulfing candles below here, it's still looking good. It's just not the strongest momentum so far. I would like some stronger bullish consecutive candles, make our way up to the upside, at least catch 10 pips as a scalp, potentially continue higher to 0.800. So we have to start clearing above these wick highs and get bullish candle closures above there to validate the momentum. Keep in mind, we do have a new 15-minute candle coming up. So we could, what would be ideal is getting the bullish close above, then the retest in the new 15-minute and continuing up in that fashion. We don't want any bearish candle closes below this candle here. Otherwise, we trade, manage, and get out. Sorry, I was just looking at my phone for 1 sec. Okay, so we have to be cautious here with this 15-minute candle. So you can see we had a nice break. You don't want to get any engulfing candles back below these areas now. You want to just retest and continue our way back up, breaking above these previous price candle sensitivity areas. With the new 15-minute candle, you might get a lower wick to here, then continuation back up. So watch the new 15-minute candle here, and we do have some UK economic data coming out. You don't want any bearish closures below here. This is the new 15-minute opening up. It doesn't have an upper wick yet, which is good, but you need bullish closures above here to continue the move to the upside. So the 15-minute candle made a slight upper wick now. We have to be cautious about that. Because if it closes like this with a weaker bearish candle, that's still good. But you need bullish candles to close above these 1-minute candle body highs now to validate more momentum and for us to take advantage of that continued squeeze and extend the buys. So this is a nice candle close, but we need to break above these 1-minute highs to continue our push back up. We need 1-minute candle closes above there. Anything below this candle, you're going to get a deeper pullback down to your entry again. So watch that. So if you get any bearish candle closures below this, you're going to have a deeper retest to your entry, so you have to be cautious of that. Otherwise, once you get bullish closures above here, you'll see that we'll get another squeeze to the upside. You can take advantage of and extend your scalp. So I'm not liking how we had this bearish candle, the weaker bullish candle, and now this bearish candle. So I do need to start seeing this bullish candle or the next one break above here. Otherwise, there is the potential we're going to consolidate or range back down to your entry. Okay, so it's reacting to this high now. we get some bullish closes above, you're going to see another continued push, but you can see exactly where it's reacting to right now. You don't want it to reject and leave a hard wick, and then with a weaker body like this, you don't want it to close like this. If it closes like this, that shows me the next candle is going to go bearish back down and give a deeper retest again, or showing less buyers momentum. I would like a stronger bullish close and closing above these bodies. So I like how it's still bullish price action, but I do not like how we're closing below here like that. It looks like we're going to get a deeper pullback back down to the entry area, because we're getting some signs of buyers exhaustion and failing to break this price point on the lower time frame. So if we break below this, like this candle here, then expect a deeper pullback to your entry and be cautious at the 0.500 area. You still need closures above these candle body highs to continue us back up. If it doesn't break these highs soon, it does look like it's going to do a pullback back to entries. Somebody's using my name and replying to comments and giving WhatsApp numbers. I'm not liking all the rejections here on the multiple rejections to break this high. So it does look like if we don't break above there in the next couple of minutes, you're going to come back to your entry. The price action is not showing us the cleanest buyer's momentum. You can see exactly where the candles keep closing as well, where we identified. It's still good if you took your entry on that breakout candle we were talking about, or this candle, but you have to be cautious, because if we break below this bullish push, you're going to go back down to 0.500. And you can see the amount of rejections we're getting at this 1 minute high area, and you can see exactly what to expect, right, when you're reading the price action. So I didn't mean to clear that, but so it looked like we had some solid price action and momentum with the entry candle and the bullish continuations here. But these amount of rejections so far are showing too much buyer's exhaustion. If you don't get a break above here, you're going to range right back down to your entries where you're going to have to close break even or like a 1 pip loss. You have to have bullish candle closures above these candle bodies to get another squeeze to the upside. I don't like how we had these rejections at these highs, this aggressive bearish candle and this weaker bullish candle. It's showing me that we're going to have a deeper pullback down here once we break below here. You really need bullish closures. That's good if we have this wick rejection, but we need the bullish closures above these candle bodies. And then we'll have another squeeze to the upside. Still teasing. Still closing below. We still need bullish closures above there, and then you're gonna get another squeeze to the upside. And then we have some UK PMI data as well. Hopefully that works in our favor for a squeeze too. Yeah, the good thing about the 1 minute time frame is you can watch buyers and sellers strength reactively, 60 seconds by 60 seconds. You know what I mean? And you can trade manage accordingly to secure partials at break even or get out of a trade at 2, 3, 5 pip loss. Trade manage accordingly, right? Because if you got that breakout candle, like I told you guys, if you get any candles below this bullish yellow box we marked out in this bullish body, you are going to get that deeper pullback back down. You know what I mean? You can see this new 5 minute candle, same thing right now. As of now, it's still making rejection wicks and failing to break above this price point for like the 5th time right now. So yes, your trade is still active, but you can't ignore these exhaustion signs and the fact that you could have a deeper pullback back to your entry. You know? Once you have a bullish close above here, watch the squeeze you would get, but we don't have those confirms. We're just getting, it was looking good when we had the 0.500 price action for the entry. This candle was looking good. Ever since then, it got pretty shitty here, right? And it looks like it's going to come down deeper now. If this doesn't do something for me to read price action and say to extend the trade or close it break even if you get the close below there, then I'm just going to end the stream shortly. In about another 15 minutes. Yeah, you can see. Yeah, volume and volatility just been trash. Pretty much besides that gold move that I didn't get to execute on because it was too fast for a manual entry there. Not much has gone on tonight. Very shitty ass London session, you know? Yeah, that makes sense too with the PMI data. It looks like with how we have like 2 minutes left until the 30-minute candle close, the 30-minute might make a lower wick at the PMI data and then potentially continue back bullish. But other than that, if you don't get bullish candle closures above here, then don't expect any more upside there, you know? This was the key entry candle area that you don't want to break below. This shit froze in place for the last 20 minutes. We've been fucking staring at it. No, the pre-New York session, I'm just gonna do it with the private channel. You know? Okay, so if you close below here now, probably best to trade. We didn't close below yet, but if you do close below, probably best to trade manage before the news data in 1 more minute. It's still holding our little zone here, but the new 30-minute candle's coming out, and then we have a little bit of UK data as well. UK says seeking to remove a 5% tariff on a whiskey exports deal with Australia. That's fucking positive, yo. Take us to the moon. We got some positive trade news. We just need this PMI news to be also solid. And then you break above this 1 minute high and you get a nice little squeeze here. I'll check out your guys' charts after we see this UK PMI data, the new 30-minute candle. It's only in like another few seconds here. Holy, this shit just stuck between the yellow magic boxes, eh? The London sessions in the private chat, we do it. So this new 30-minute candle doesn't have an upper wick yet. It'd be nice if we could get a quick squeeze and then close out, and then, you know what I mean, get that 10-15 pips. Don't fall for this yet, because it's the 30-minute candle without an upper wick. I'm just trying to see if we could get a quick squeeze. CPI data was good as well. Come on, baby. I would close a partial position now if you got a scalp. Just because it's if we come to like 6.5 here, I would close a partial position as a scalp. Just because this 30-minute without a lower wick's a little bit iffy, but it's looking good. The PMI data was good, like I told you guys it would be. 62.9, 0.9%, 0.9 points better. Hopefully you guys secured a partial position as a scalp. The 30-minute has no lower wick. The 30-minute candle has no lower wick. Let's see how this runs now. Keep your runners risk-free, like just secure partial, you know what I mean? I just don't trust that 30, like it could come down quickly to make that lower wick, then come back above. It's only fucking 13 pips from that entry candle we called so far. Oh! 15! Oh! That's looking a lot better. Fuck. We waited a long time. And it fucking paid off, boys. We got the scalp. We patiently waited for the 0.500. And it paid out for at least 10 to 15 pips. We use the fundamentals in our favor with the predicted positive PMI data. You guys got the play-by-play price action reading for the entry at this candle or the entry at this candle. We were watching this little shitty consolidation zone, but that didn't break our price action. Then we got the 30-minute candle solid price, solid market data to give us that 15 pip squeeze. And now we're just getting a reaction. Maybe we'll get a pullback, you know what I mean? But let's see how it goes. Hopefully everybody got to secure at least 10-15 pips as a scalp during this slow ash session. You know what I mean? Oh shit, gold also retesting these lows. If gold has a bearish candle close below 1894, there's a sell play potentially down to these previous lows again. All right. Give me a W in the chat for the price action reading. At least you got to secure 10-15 pips. It's not like it was a crazy 100 pip movement night. We got what we fucking could take on GJ at least. You know what I mean? We missed the gold sells because it was way too impulsive. So, okay, let's do a recap here. We called either gold sells at a retest of 1900 sells or break below 1895. We didn't get the analysis for gold played out with the US dollar strength, but we didn't get a chance to enter because gold literally fell 40 pips in 1 minute. You know what I mean? So we didn't get a chance to enter there. That's all good. The analysis still played out. Gold sellers printed new corrective lows here. We're still respecting this bearish market structure on gold side for the new month pullback so far. All right. GU we stayed out of because disgusting range. Euro USD we stayed out of because like just bouncing up and down. UCAD disgusting range. US 30 ranging. So we were focusing on gold and GJ tonight. Gold analysis played out, but trades didn't get to play out because we didn't get to execute there. GJ though, GJ buys played out. 0.500 buys called ahead of time. Entry at this candle or at this candle. And then you got you got a minimum of 10 pips up to like 18 pips. Still active as well, you know what I mean? Now, obviously, when you're looking at the price action for anybody who's still holding GJ runners, you got to look at the same shit here. Was GJ not as fast of a move as gold for the entries? Marcus, are you a fucking retard? Do you see a 40 pip spike on GJ in a minute? How are these two 1 minute candles or up here as impulsive of entries as gold, which dropped 40 pips in 60 seconds? Fucking retard. This is 18 pips. So I think someone's mad he missed the trade. I think someone got shaken out of the market here. They didn't trust the 1 minute price action. Did I not give you guys a 1 minute step-by-step breakdown on GJ with the analysis ahead of time for above 0.500? And then like, hey guys, this is looking good. This is looking good. Hey guys, we're getting a bit of a consolidation here. Don't worry, if we still hold above 0.500, we're good. We were literally describing 1 minute candle by candle. What else could you want? it's not like it's my fault that GJ didn't run 20 pips, 30 pips, or 50 pips. The market volume and volatility is not up to me. You know what I mean? But we got this impulsive move. There's a difference between being in the hot seat and calling things out based on experience, and a difference between being in the audience. Never forget that. Drill that into your head. You guys can call it cocky or whatever you want. Not everybody can do what I do. You can take that how you want. If you're angry about it, go start your stream. Go start your London stream. I'll shout it out next time you want to do it. We'll all come watch you. Challenge is open there. So anybody who's still complaining, even though we were talking about that GJ analysis ahead of time, even though we described it minute by minute, even though we called gold analysis sells as well, we just didn't get to execute on it. Anybody who's still complaining, DM me on Telegram, send me your YouTube channel. Next time you want to live stream at New York or London session, I'll give you a personal shout out and make sure at least 100 people show up and you guide us through the steps. You give us the analysis ahead of time, what to look for, when to enter, when to close partials, when to exit. You take over the hot seat. It's always open for anybody to go ahead and do it, you know? The confirmation for entries was literally, hey guys, this entry candle looks good. This candle looks good too. We're above 0.500. That was it. As long as we don't engulf back below. How many times did I say, as long as we don't engulf back below this candle, we're good? How many times did I say that? How many times did I redraw out the boxes and say, as long as we don't engulf below this candle, we're good? I said price action's looking good. We're getting a little bit of resistance here and failing to break above this price point to extend buys. And did I not say as soon as you break above here, you're going to get another impulsive move? And what did you get? Another impulsive move. Marcus wanted me to fucking hack into his system from here, enter for him on his broker. I even said as soon as you get bullish candle closures above here, it's going to be a squeeze. It's gonna have a nice little extra push for us. It's not my fault we didn't fly to 0.800. That's just the nature of the beast. Like, you know what I mean? But if you guys rewind it, literally said this is good for entry, this is still good for entry, it's still good for entry as long as we don't engulf back below this candle. Obviously you don't want to fucking enter up here, but you know, gold here is looking a lot better as well, as we had the impulsive drop here, more of this corrective upside play. But we have the new 4-hour candle coming up in 19 minutes. You know what I mean? So I'm pretty sure the new 4-hour candle will give us a pullback to like even 1897, then continue back down. Fam, can you guys go rewatch this? I even told you guys, hey, if you guys took your entries here, if you guys took your entry here, if you took your entry here, if you get candle closures below here and price comes back down to your entry, close it, break even, or take the 3 pip loss. I think there's too much genius being said in a 30-minute time span as we're breaking down the analysis. I even said, if you get any bearish closures below this candle, get out. If you get any bearish candles below this bullish candle, get out. Close it, break even, or get a re-entry, or take that 3 pip loss. I said once you break above here, you'll get another impulsive move to the upside. You can extend your trade. I told you guys here, close some partials just in case you don't get a pullback. No, the confirmation is not just having a 1 pip candle close above 0.500. If you paid attention, it's not just the fact that it's 0.500. You know what it is? It's exactly where on the dot you rejected before and failed to break higher was right at 0.500. But you guys don't pay attention to that. So it's not just the fact that it's our PPL. The last rejection points we had on GJ, even when we were making our way down, 0.500, 0.500, 0.500. Melt down, come back up, 0.500, 0.500 rejections. So that's why we didn't need a major order block to validate the momentum as we're having bullish closures above 0.500. But like I said, maybe I spoke a bit too fast for everybody. You know what I mean? So as soon as we finally got bullish closures above 0.500, it was looking solid as long as we didn't engulf back below this candle. What else do you want me to describe this? If you rewatch this stream, yes, trading with ice. If we entered here, if I entered on this candle, or if I entered on this candle, and we had a bearish engulfing close below here, I would, like I told you guys, I would accept that loss of 3 pips, 4 pips. That's what I was trying to tell you guys. If you get any bearish candle closures below here, take that 5 pip loss. Do you get what I'm saying? So that's what I was saying. The entry was good. The secondary entry candle was good. And the continued price action was good. If you got any other bearish candle below here, we would have closed out and took that loss. Nobody got lucky with anything. You're just fucking mad. Like, I don't know. How are you fucking mad at I just gave you free money. This is why I'm not gonna do YouTube streams. You know what I mean? You guys can suck my dick. Marcus sucks my dick every single session. You watch my streams every fucking time. And now you're mad because you missed out this trade. Because you're a fucking retard. And look what GJ's doing for your runners. Actively fucking pushing up. As I'm talking. Are you guys not holding runners still? Risk-free? Who's still holding runners? Who's still holding runners? Okay, your runners are almost at 20 pips now. So, what are you mad about? That's what I mean. What are you mad about? You know what I mean? You'll have fucking 5,000 people on Raja's New York stream where Raja goes, big red candle coming up, sell. I'm gonna sell here below here. They'll catch 8 to 10 pips. They won't even give like a full breakdown. I know, I've seen Raja's streams. You can tell him this yourself. Marcus, you weren't paying attention to the start of the webinar. That's your issue. Because I already gave a full analysis of what we were going to look for at the start. That we didn't need any crazy break and retest above 155.5 because exactly we were getting these rejections before. You have all this liquidity generating, and then as soon as you have that momentum, you don't need to fucking break and retest all the way above there again. And then what else did we have at 430 to help us out? That your boy, who's a fundamentalist, told you. What else did we have at 430? The PMI data, right? Was UK PMI data not good? Like I told you guys, PMI data is going to be good. So we're in a GJ bullish bias. We have this consolidation zone, liquidity generating. We finally break above these rejection points and 0.500, and I give you the exact candles to enter on. And people are complaining still. And it just ran 20 pips. I even told you guys to calm down when you guys were saying GJ's coming to 0.500. Wasn't even there yet. Do you see how when it was at 0.500, I was on top of it before anybody else? And said, okay, now it's time to go. This is why, yeah, you can rewind this fucking stream. You can go to the very start of the stream for the GJ analysis, the gold analysis, and see what was called ahead of time. And then exactly what we were looking for. This is what happens when you guys watch 10 different streamers, follow 10 different people, and then don't actually put any time and effort into your shit. You know what I mean? But this is why Seed doesn't fucking stream anymore. This is why Monty doesn't stream anymore. This is why I stream less. Because the YouTube audience is a bunch of broke fucking retards. Only I'm going to tell you guys that. Raja's not going to tell you guys that because Raja makes a good amount of coin from those thousands of viewers a month and his account's monetized. You know what I mean? But 99% of the YouTube audience and social media audience is dumber than fucking bricks. And that's just the way it is. It's a big transition when people go from being a capital hungry hyena in the YouTube audience into actually coming into the private chat and seeing like, holy fuck, shit's serious over here. You know? Gold, wait for the new 4-hour candle. It's just... That's why I told you guys don't worry about gold yet. No, it's not the same because they're 10 levels ahead, you guys. There's no signal chat. You guys are just fucking retards, you know what I mean? Nobody will tell you guys this shit except for me. Thank you, Private Chat. I appreciate the love. Yeah, what time is it now? 4:51. Yeah, I'm gonna call it a night. I'll see everybody next time. YouTube chat, go fuck yourself. I'm probably not gonna be streaming for a while. You guys can suck my dick. But private chat, I'll see you guys every day of the week. We only called 2 trade ideas this webinar. GJ buys above 0.500 and gold sells that we didn't get to catch. You know what I mean? All you guys can thank the trolls in the chat that there's not going to be any YouTube streams for a while. I'm going to take it easy. Remember, this is all free. This is all free. You guys come to watch me, you know what I mean? So, yeah, go fuck yourselves. Yeah, you guys can all suck my dick. You guys can go learn from the marketers. I'm good. I made 40K the last month trading. I made the same with Capital Hungry. I made 30K in the previous 2 weeks. 5K yesterday just trading gold. I didn't even want to do the YouTube stream today. But I was like, you know what? Fuck it. No, Capital Hungry's kept the same consistent amount of members whether I do the streams or not. Because we do this shit every single day in our chats. You know what I mean? But I'll see you hyenas. I don't know when. You guys already drove away Monty. You guys already drove away all the London streamers. Nobody wants to deal with you cocksuckers. You guys should go watch Daniel Savage. Or have one of these trolls start to stream. You know what I mean? Yeah. 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 Yeah, exactly. No, just to prove a point, I'm going to close Capital Hungry signups as well. I'm closing Capital Hungry private signups, and I'm not streaming on YouTube. You guys can watch Raja's shit show stream, which is just pure entertainment, or you guys can wait for, I don't know, whoever else streams nowadays. I don't even know if Raja's been streaming. I thought he's moving and shit. Yeah, so I'm gonna close up the signups to the private channel so nobody else can sign up, and then I'm not gonna be doing any YouTube streams for a while. Fam, people are like, why are you hating on Raja? Listen, anybody here who is part of the gulag or Raja's market fluidity, he doesn't know you exist. He doesn't give a fuck about your existence. That's my friend. Me and him can joke around and talk how we want. Me and Raja are actual friends in real life. You know what I mean? We roast each other and talk every single day. Meet up sometimes, grab a bite, whatever the fuck we want to do. For everybody in the gulag who thinks they know Raja, he doesn't give a fuck about you. He does not give a fuck about your existence. He doesn't care. He'll probably reply to some of your messages and shit, double tap your messages and give you a heart. That's about it. You know what I mean? So all you guys who are like trying to get angry as fuck over some jokes about Raja and I, like you guys are retards. Don't forget that. Our IQ levels are way too different. There's only so much of this I can take before I realize you guys are dumb as fuck. You know what I mean? But Asian session close is coming up. New 4-hour candles are coming up. Yeah, you guys, that's enough for me, man. I got a headache now. Fuck. These guys are full fucking retards. Yeah. Alright, I'm gonna call it a night. Everybody take care. Let me know who you guys are learning from for free after this. That's a good point. All right, everybody. Yeah, make sure to rewatch. Full analysis was given on gold, GJ, as well as other pairs as well. Nice. I come here to say bye, guys. Yeah, the stream's over. It's like it's 5 a.m. The stream's been going on for like 2-3 hours. No? What time do we start it at? 2? Yeah, let me know what marker or streamer you guys are learning from next. That gives you guys news, analysis ahead of time, trade ideas, pretty much straight signals, entries, exits, candle by candle play. This isn't, remember, this isn't candle replay mode. This is no candle replay mode. Don't forget that. Someone said, who should I hate? Nobody. All right. Be cautious of Asian session close in the new 4-hour candle setting up pre-New York hours. And don't forget the flood of economic data through New York if you guys are trading New York. Someone said, I'm learning from Capital Hungry and losing for the last 19 months. Capital Hungry hasn't even been active for that long. You talk. Okay. Sharma FX doesn't even trade. I don't know, what is she, a FTMO trader? Any mentor who trades FTMO, just use your brain. You know what I mean? Otherwise, like, not everybody's showing you guys actual trades and shit, analysis. Half the people can't even show you that. You know? I'm gonna catch some sleep. Oh yeah, don't forget NFP figures, initial jobless claims, ISM non-manufacturing PMI, crude oil inventories, Bank of England, Governor Bailey speaking at 12 p.m. Don't forget your fundamental points as well. We discussed at the start of the webinar. As well as your mental reminders. Make sure to like and subscribe. Comment on the saved webinar after, you know what I mean? And I'll see everybody next time.